IMS, ITC changes or credit note shocks. New GST rules from October 2025. From October 2025, your GST filing process is about to change forever. If you ignore this update, your input tax credit could get blocked and your compliance score might tank. Let's decode the new GST 2.0 system and the biggest change. GST 2.0 effective the 1st of October 2025. Old GST new IMS workflow. ITC under risk if invoice not accepted. Hi everyone, welcome back to JH Consultancies, your go-to place for the latest tax and finance updates. In this video, we are breaking down the October 2025 GST changes, IMS, ITC restrictions, credit note tightening, and new compliance penalties. Whether you are a business owner, accountant, or tax professional. Why this change matters? Since 2017, mismatched invoices and fake ITC claims have cost the government thousands of crores. So now, the CBIC is introducing a smarter, digital checkpoint. The Invoice Management System, or IMS. Think of it like a WhatsApp red receipt for invoices. The recipient has to either accept, reject, or mark pending every invoice uploaded by suppliers before claiming ITC. No action equals no ITC credit. How IMS will work? Here's how the new system will work step by step. Supplier uploads invoice in GSTR1. The invoice auto appears in recipient's IMS panel. The recipient must choose one of three options within a prescribed time. Accept, confirm it's a valid purchase. Reject, flag if the invoice is wrong or duplicate. Pending, keep for review, no ITC until accepted. If you ignore the invoice, your ITC for that month won't appear in GSTR3B. So now, claiming ITC isn't auto. ITC claim restrictions or new penalties. The biggest shocker. ITC eligibility is now linked to timely invoice action. If you fail to accept or reject invoices in time, the portal can auto-block your credit. And there's more. Late action ITC carry forward delay. Wrong acceptance liability on you, not the supplier. Habitual non-response flagged under high-risk category. Credit note rules tightened. Under GST 2.0, even credit notes get a new treatment. A supplier can now reduce output tax liability only when the recipient has reversed the related ITC in their books. Example, if you return goods worth 1 lakh, your supplier can't claim the credit note benefit until you reverse. This will make reconciliation tighter, but also reduce mismatches. Supplier recipient equals dual confirmation needed. New compliance and penalty rules. Along with IMS, several new compliance changes kick in from October 2025. Pre-deposit is now mandatory before filing appeals. Track or trace introduced for high-value goods. Movement of sensitive items like gold and tobacco monitored. Manual reconciliation returns. No more auto-population of ITC in GSTR3B. ERP updates. Essential businesses must reconfigure accounting software for IMS workflows. Basically, GST 2.0 is turning into a two-way verification system. Every transaction must match from both ends. Impact on businesses. So what does this mean for you? Daily invoice checking will become part of monthly compliance. Late night GSTR2 reconciliations will be replaced by real-time IMS validations. Accounting teams must coordinate with suppliers faster. Non-compliance can lead to ITC freeze, higher working capital blockage, and audit scrutiny. ERP systems Tally, Zoho, SAP will need API integration with IMS. Action plan and summary. Let's summarize your action plan for GST 2.0. Update ERP accounting system by September 2025. Assign staff to monitor IMS dashboard daily. Train suppliers and recipients to mark invoices correctly. Review old credit notes and reconcile books. File returns on time to avoid automatic ITC blocking. Do this before the 1st of October 2025, and you'll be fully ready for GST 2.0 while others are still panicking. The GST system is getting smarter and stricter. The days of blindly claiming ITC are over. So, prepare early and protect your credit before it's too late. If you found this video helpful, don't forget to like, share, and subscribe for more updates.